Good afternoon. This is the Global Stock Investor Show. Welcome, global investors. Today is a new sector, part one. This is going to be the finance sector. This is going to be pretty interesting. Pretty much, I've been discovering a lot more about my financial education through the finance sector and finance sector companies, which I'm going to show you guys. I'm going to give you guys five finance companies that pretty much entails like index funds, credit cards, uh, the company that is in charge of the FICO scores that we get for credit. Um, Another company that pretty much just analyzes index funds, the market. So this is pretty much going to be. I'm looking forward to this finance sector. I can't wait to get through all the financing, all the sectors that I have, so I can get really into showing you guys like how to invest. Well, my strategy. This is my journey, and each day I'm growing as I put out a video, and I learn daily. So, and that's the thing. I put out a video daily to grow and to learn because of the fear that I first had. Well, I had this fear for years when I was younger. I wanted to invest in the market, but because um, they had like high commission fees, I was always scared of it. I had a lot of people telling me to invest in the market back when I was younger. I never did. I just, my mind, I guess I felt like I was too hard headed to, trust people because I grew up, I didn't have a mother and father to raise me. So pretty much I was just out here on my own. So this is pretty much this channel. I want to give strength to myself and to anybody that's watching this that anything's possible. And I started out with just $100, and that was back. This is pretty much my going on my second year. I started back 4th of January 2018. So I mean, in my journey, what I'm learning now, even for in this Robinhood app, any of you guys with Robinhood, make sure all this day, 1 week, 1 month. This is all to me. This is all for traders. I'm more of a long term investor. So my thing is, I want to see all, because traders they live a whole different lifestyle. So um, they're pretty much based on these. They look at these indicators pretty much since I'm a long term. I'm only concerned about the all. So pretty much I look at the all, and I mean I'm up. I got it set on all, as you can see, and then whatever your percentage is, as you can see, I'm at 3.35%. So that's pretty much my whole year, or the whole time I've been investing. That's pretty much my percentage. So, and that's the number to focus on for me for a long term. Each year, my goal is to double. So, say I got 3% for last year. This year, 2019, is pretty much 6%. And just to keep it like that, whether the market goes up or down, it's always going to be a solid 6. And that's my goal, is to make it grow that way. And then the following year, double it to 12. And if I don't reach the 12, come back down and add just another 3% to make it a 9%. So between 9 and 12%, I need to hit that goal each year. So I go up 3%. If I don't hit the double, then I come back and I just add 3% to it to kind of look at the fundamentals. So that's how I'm looking at strategizing for this year, 2019. Pretty much my assets under management. I have 60% stocks, 30% index funds, 5% bonds, ETF, and then 5% REITs. So my strategy for 2019 is invest $1,000 into the market. With that $1,000, $600 will go to stocks, individual stocks. $300 will go to index funds. There's three big major index funds, which is iShares, owned by BlackRock, and they're the number one. Number two is SPDR and S&P, which are owned by S&P Global. It's an index fund also. And then you got Vanguard, which is owned by the Vanguard Group, but they're private. So those pretty much my focus on index are those three index companies. And then REITs are pretty much anything dealing with REITs. Um, I'm investing in in those companies that are REITs because I've noticed they're very attractive for dividends, monthly dividends at that. So that's gonna offset a lot of the down market and pretty much keep pumping money into the account monthly. So I'm gonna grow that 5% REIT. So pretty much now I'm on a moderate. I'm a moderate. That setup is probably for me set up moderately to pretty much it's in the middle. I have a defensive and I have an aggressive. But since I'm starting out, I'm still learning the markets. I'm still going over the basics. I know it might seem boring, but it's just to me to get used to reading about companies. Their PE ratios, their market cap, dividend yields, pretty much a little description about the company to get an idea. Where the headquarters is at, who is the current CEO, what year was it established. So I look at those factors, and then as you can see, I pretty much now I own 72 stocks. So as you can see, I'm pretty much heavy in technology. As you can see, Google, Netflix, Lockheed Martin, Berkshire, 3M, McDonald's, Baidu, Apple, Facebook, Nvidia, Visa, Johnson and Johnson, United Technology, Disney, Microsoft, Procter and Gamble, Waste Management, Walmart, Nike. I'm just a little sensitive. Where were we at? Oh, Nike, Budweiser, Starbucks. This is a index fund. Another iShares index fund. This is a SPDR index fund. Coca-Cola, California Water. This is international paper. Sony, Atom. But once I hit 100, I'm gonna go through my pretty much the shares that I have, and they range from 1,000 all the way to $1. So I don't discriminate on pretty much companies. I'm more invest in sectors that are pretty much support the whole globe as one unit. So I know with these companies, and pretty much it's teaching me. Got sensitive fingers today. It's just teaching me about pretty much how the world economy works. So, and it's kind of getting me just out of the U.S. bubble. It's kind of getting me used to, what's going on in China, what's going on over in Europe, what's going on in South America, what's going on with our neighbors to the north, Canada, what's going on with our neighbors to the south, Mexico. So, pretty much, and those companies, they're that I've seen, they're pretty much under $100. But I just want to see like how they look, how they perform, and then the dividends. Some of them have dividends. Look, I have Manchester United. That's a soccer club out of Manchester, England. That's what. There's a whole bunch of stuff on here, but I'm gonna go through it. As you can see, the prices. Like with dividends, I bought all these companies like the Sunworks. As you can see, anything under $5, I bought with all dividends. So, and then I think some of them were given to me by Robinhood for referrals. So these two were referrals from Robinhood. Oh, this one also. And then the rest of them with dividends, I bought other companies with it. So my thing now, my strategy is pretty much build the foundation, build the pillars. So that's why you don't see me doubling up on anything, going for the gusto now. My strategy is just to keep buying individual companies, stack up on index funds. I haven't bought a bonds ETF. I need to put bonds ETFs into my portfolio to pretty much keep a balance, and then REITs also. So that's my strategy for 2019. Let's jump into it. This is finance sector part 1. The first company is Fair Isaac. And pretty much with Fair Isaac is how it's a system that gauges us on our creditability. So This was a company when I first saw it, it just blew my mind. I'm like, wow, people, you don't hear nobody talking about these companies. So that's why I dig deep down, and pretty much companies that are used every day that people don't talk about. These companies are um, pretty much the gold that people are not discovering. We're pretty much on the media of Nvidia and Facebook, and we're so drunk off that, where other companies, they don't we don't show any love to it. So now I'm here to bring it to you guys and pretty much invest in these companies. So it's all about your portfolio. If you're a Robinhood investor, that's all I can gauge off of the system. But you go to their all, and that percentage, you always want that percentage to be 10% or higher. And that's what I'm going for. And then once I hit the 10, I keep increasing little by little. So, I mean, I'm at 3%. That's pretty good for me. You know, pretty much last year being stock heavy, I was 95% stocks and 5% mixed with index funds and REITs. So, okay, let's jump back into this. Fair Isaac, the 5 year, as you can see, beautiful. Hit the peak at September 14th, 2018 at $243. Pretty much, as you can see, this has been a perfect time to buy. Uh, Man, a lot of stocks went on sale right before Christmas, but as you see, it's starting to climb back up. So um, the current market price is $228.51. As you can see, it's climbing back up. About Fair Isaac Corp engages in the provision of decision management solution. It operates through the following segments: application, scores, and decision management software. The application segment includes decision management applications designed for a type of business problem or process such as marketing, account origination, customer management, fraud, collections, and insurance claims management. The scores segment consists of business-to-business scoring solutions and services, business-to-consumer scoring solutions and services, including MyFICO solution for consumers, and associated professional services. The decision management software segment comprises the analytic and decision management software tools, FICO decision management suite, and associated professional services. The company was founded by Bill Fair and Earl Isaac in 1956 and is headquartered in San Jose, California. I'll be there tomorrow. West Side. I gotta say before I continue, I'm all about California. Pretty much, I support them. Pretty much with my disabilities, they have medical cannabis out there. So that's another thing that I'm from the East Coast, Georgia. I grew up in. I just marijuana out there. If you try to get it for yourself to self medicate yourself, it was always a problem out there, and just just the vibe was so different versus California. It's just uh, for me from to being from the East Coast and now living in Cali, I'm loving it. And in San Jose, that's where they got a Tesla factory out there in San Jose. So I live south. I'm out. I live in Concord, so I'm more northeast. Okay, the current CEO is Will Lansing. Employees 3,668. Headquarters San Jose, California. Founded in 1956. Market cap 6.64 billion. PE ratio 45.36. Dividend yield 0. That's the only thing that sucks. It's just, I noticed with the dividend yields for the financial companies, they're probably you'd probably get like point fives, under a 1%, under a 1. So that I've seen. So that's probably why it's not that attractive. But to buy and hold, as you can see, there's growth in this. So it's definitely going to pop back up past that 240 again. I mean, as you can see, the hockey stick. It just they just got caught up in that. So they're probably the correction. That's just a correction. People call it a crash, whatever, but it's just correcting itself, and then boom. So, okay, the second finance company is Intuit. Okay, let's go to the 5 year for Intuit. Another upward trend, hockey stick. Peaked September 14, 2018 for $227.54. Current market price $215. About Intuit Inc. Common stock, also called Intuit, is a financial management and compliance platform company which engages in the provision of business and financial management solution. It operates through the following segments: small business and self-employed, consumer, and strategic partner. The small business and self-employed segment offers QuickBooks, financial and business management, online services, and desktop software, payroll solutions, payment processing solutions, and financing for small businesses. The consumer segment includes do-it-yourself and assisted TurboTax, income tax preparation, products, and services. The strategic partner segment comprises professional tax offerings, which include La Certe, ProSeries, Profile, and ProConnect Tax Online among professional accountants. The company was founded by Scott D. Cook and Thomas A. Prolex in March 1983 and is headquartered in Mountain View, California. The current CEO is Sasson K. Goodarzi. Employees 8,900. Headquarters Mountain View, California. Founded in 1983. Market cap $55.65 billion. That's large. PE ratio 44.54. Dividend yield 0.76. Buy 52%. Hold 35%. Those two together more than 75%. The third finance company is Mastercard. Okay, let's go to the 5 year. As you can see, another one. I mean, you're really not gonna see that with a lot of individual stocks, you know. And if it's like that, you know, look at another correction. So that pretty much, for me, for what it's telling me, that there's been a big correction in the finance sector. So, and then for it to bounce back up for the following year. It peaked on September 28, 2018 at $222.61. Current market price is $2.14. No, market price $214. Cents. About Mastercard Incorporated, also called Mastercard, is a technology company which engages in the payments industry that connects consumers, financial institutions, merchants, governments, and business. It operates through United States and other countries geographical segment. It offers payment solutions that enables the development and implementation of credit, debit, prepaid, commercial, and payment programs and solutions. The company was founded in May 2001 and is headquartered in Purchase, New York. That's interesting. I didn't know that. The current CEO is A. Japao S. Banga. Employees 13,400. Headquarters Purchase, New York. Founded in 2001. Fairly new. I didn't know that. Market cap $299.06 billion. I think that's mega. That's a mega cap. PE ratio 38.16. Dividend yield 0.57. I've been noticing the PE ratio has been high and the dividend yield's been under 1%. There's little patterns that I'm seeing. Finance. Buy 90%, hold 7%. Those two together more than 75%. That was Mastercard. The fourth finance company is MarketAxess, and these companies that nobody's talking about, I just came across them just through pure research and through Google. And it just kind of interests me. As you can see, it's not as pretty as the other ones, but you can see the upward trend. This is the peak, March 16th, 2018 at $224.59. As you can see, currently crawling back to that same peak. Market price $213.62. About MarketAxess Holdings Incorporated operates as an electronic trading platform that allows investment industry professionals to trade corporate bonds and other types of fixed income instruments. It also provides data and analytical tools that help its clients to make trading decisions and facilitate the trading process by electronically communicating order information between trading counter, counterparties. The company's patented trading technology allows institutional investor clients to request competitive executable bids or offers from multiple broker dealers simultaneously and to execute trades with the broker dealer of their choice. The company was founded by Richard M. McVeigh on April 11, 2000, and is headquartered in New York City, New York. The current CEO is Richard Mitchell McVeigh. Employees 429. Headquarters New York City, New York. Founded in 2000. Market cap 8.03 billion. So that's under the 10. So that's a mid. PE ratio 46.71. High. Dividend yield 0.80. Buy 0, hold 89%. So that gives you more than 75%. So that's just a whole company. Last but not least is S&P Global. And I found this pretty much researching the pretty much who owns SPDR and S&P index funds. I came up with S&P Global, as you can see. Another upward trend. It peaked on September 21st, 2018 for $211.46. As you can see, another correction. Current market price $193.83. About S&P Global Incorporated engages in the provision of transparent and independent ratings, benchmarks, analytics, and data to the capital and commodity markets worldwide. It operates through the following segments: ratings, market and commodities intelligence, and indices. The ratings segment offers credit ratings, research, and analytics to investors, issuers, and other market participants. The market and commodities intelligence segment serves investment managers, investment banks, private equity firms, insurance companies, and commercial banks. The indices segment covers investment vehicles, exchange traded derivatives, index related licensing fees and data, and customized index subscription fees. The company was founded by James H. McGraw and John A. Hill in 1917 and is headquartered in New York City, New York. The current CEO is Douglas L. Peterson. Employees 20,400. Headquarters New York City, New York. Founded in 1917, so it's been around. Market cap 48.63 billion. That's large cap. PE ratio 28.84, pretty high. Dividend yield 0.97, so under that 1% that I've been noticing financing companies. 59% buy, 35% hold. Those two together, more than 75%. So there you have it. These are the 5 finance companies, and the total investment for these 5 finance companies comes out to $1,064.96. So let's take it back home. I'm always staying on all. Remember the alls for long-time investors. The all. But if you're a trader, you trade. These is pretty much what traders look at. So, I just figured it just hit me because it was just getting confused, and I just needed something to gauge pretty much my performance. And if you want to gauge your performance, you guys out there really want to gauge and really know how to grow and have your own formula, this is where it's at. It's in all. So that's pretty much from the time you started till now. So What? So if it gets into negative, I mean, there's probably something, you're probably stock heavy. You're probably carrying um, more than 95% in stocks. That's what I've learned from through this. I was 95% stocks. That's what my portfolio, and that's why I hit so hard. I mean, that's a nasty hit, negative 8.51%. So during that time, um, I lost $479.13, but I regained it. Luckily just through my faith and just being my first year and not selling it or nothing like that. So that's why I am dedicated to um, pretty much build this, build up this portfolio and pass it on to my kids. So and teach them about to keep this in the family for generations and keep passing it until they come up with a different system. But right now we're in the Federal Reserve System. Everything's based off credit, central banks. So as long as that system is in play, that's what I'm gonna invest in because they're running everything. So it's to me it's not logical to be like, oh, I'm not gonna invest in Fair Isaac, Intuit, Mastercard, MarketAxess, S&P Global, but they're running the whole financial game out there and everybody's playing it. So I just don't understand why people don't talk about it, but um, I think to me they're fascinating. I mean, if we use it every day, why not invest in them? Especially that Fair Isaac. When I kind of was curious about, somebody was telling me about how everything is based off FICO scores, and I didn't know pretty much really to look at. Oh, there's Fair Isaac. They're the company that pretty much um, makes it possible for us to have a FICO score. So why not invest in those companies? So this is pretty much my finance sector. So I think I got like 5 more parts to go, but I'm just breaking down 5 companies, going over it slowly but surely. This year, I'm gonna show you guys my strategy, my journey, and pretty much if different way of looking at investing. Because I look at this also as something fun for me. Because as a kid, I used to collect baseball cards. Well, I did everything as a kid. I mowed grass in the summer. In the winter, I shoveled snow. In the fall, I raked leaves. I lived by a golf course, so I remember, as a kid, I had to teach myself everything because I didn't have a mother and father to direct me in nothing. I didn't have anybody. So I would go into the water when the golfers would try to hit the ball over the water, but a lot of it would go in. I would go into the water, grab the ball, and then sell it back to them, and they'll buy it. And then plus a lot of them, I found out, those were their lucky balls or something like that, and they go in the water and you retrieve it, they'll even give you more for it. The value, I just saw the different value. I was like, wow, and I asked him, well, how come, he was paying me this much? He was like, oh, this is my favorite ball. Versus other people, other golfers, I would notice that, I still would make money, but I noticed like certain people have uh, like lucky balls and stuff like that. I'll get more for going in the water, because no kid was doing that. My sisters would just watch me, and I would just go in there and with no matter if I caught a disease or if there's an alligator in there, I just didn't have no fear as a kid. So, but yeah, I like that concept. But I started collecting like garbage pail stickers as a kid. I like the arts. I'm an artist by heart, so I like all that self-expression. So the Garbage Pail Kids was pretty much the my art to me growing up. Like I didn't like the how Mona Lisa and Leonardo da Vinci and all these paintings. Like my pretty much my art. What I grew up with fascinated me was the art that from Garbage Pail Stickers because um, I'm from this is when my stepfather was in the military. He was stationed in Minot Air Force Base in North Dakota. So a lot of this I learned there. But pretty much my concept with collecting companies, like collecting baseball cards and cards with value, and if you could trade them for more, kind of like that concept. So that's what kind of got me back into my childhood, um, my state of mind. Me being a student again, so I'm kind of like finding that energy again, and trying to battle that midlife crisis that pretty much us men we face. So pretty much I'm just keeping myself afloat, keeping myself active, Keep myself posting these videos. Hoping you guys like this. Hoping this is entertaining for you guys. I hope you learned something. Or if you have anything, comment. Let me know. I want to see like how the way you thinking. Your story of inspiration. Because I see pretty much anybody I see with the Robin. Well, because I can relate more to the Robin Hood side. Like I give them props because it's hard to even go into this world because there's so much information. But my hats off to all you guys that are pretty much Robinhood investors and you're investing your money into it. I know how scary it was at first, but now when you're in it, it's so addicting. And I just pretty much want to get that off my chest. This is gonna be my last episode from I'm in Cali, Colombia, in South America. So next time I get on here, I'll be back in California, West Side. So I fly out tomorrow. I start class tomorrow too. So I'm excited to get back. Um, and this is pretty much my journey, my story. I started with $100. Now you can see my portfolio. I'm at $5,821.81 as of today. Going on year 2. Pretty much my style is I have a portfolio ratio that I'm sticking by this whole year to see pretty much that where you see this all. I want that all. I want my all to be 6% instead of the 3.35 for this year. And if I could get it past that, wow, then pretty much I'll stick to this formula and keep adding to it. Or if I need to adjust it, I'll adjust it. If I need to get more aggressive, I'll do 70% stocks, and then 70% stocks and probably 30% index funds, and I'll take out the bonds, ETF, and REITs. But if I have to go more defensive, I'll cut it down to 50% stocks. Um, 50% stocks, 30% index funds, 10% bonds, ETFs, and then 10% REITs. That's my defensive if I have to go that route. But pretty much this moderate in the middle, it should pretty much show me what I need to do and what not to do with the ratio that I have and how I'm going to distribute or allocate, as they say, into my different sections within my portfolio. So there's 4 sections that I'm pretty much working on in my portfolio. 60% stocks, 30% index funds, 5% bonds, ETF, 5% REITs. In conclusion, Fair Isaac, one share of Fair Isaac is $228.51. Dividend yield 0. Intuit, one share of Intuit is $215. Dividend yield 0.76. Mastercard, one share of Mastercard is $214. Dividend yield 0.57. MarketAxess, one share of MarketAxess is $213.62. Dividend yield 0.80. Last but not least is S&P Global. One share of S&P Global is $193.83. Dividend yield 0.97. Outro. Subscribe to the channel. Comment any questions or recommendations you have. Like if the information was inspiring for you. And share this information with other global stock investors. While you're slaying dragons, I'll be taming them. My motto, keeping investors happy.